Welcome to Yadnya Investment Academy. In our earlier video on SIP, we have seen what is SIP. We have also seen how SIP can serve as a vehicle for us to reach our long-term financial goals comfortably. So let us delve a little deeper and find out more benefits of SIP. The first benefit is it instills the much needed discipline of saving. The current era is an era of high consumption. We are exposed to credit cards, there are a lot of malls around, we want to buy fancy cars, fancy gadgets, and even though we are earning well, we end up spending more. So when you actually want to start an SIP, you have to see what is your income, what are your actual expenses, and how much you can invest. So after starting your SIP now, you pay yourself first and then you manage your expenses from what is left over. And this is how you start saving. The next benefit of SIP is it reduces the overall risk of investment. What you see in front of you is how Sensex has moved from 2006 to 2016. The horizontal axis shows the time and the vertical axis shows the market level in multiple of 1000. So if somebody had an SIP from 2006 to 16, he would have invested at each stage of the market, that is in the highs and in the lows of the market. And the end result would have been steady capital appreciation. This is how SIP reduces the overall risk of investment. The next benefit of SIP is that the average purchase cost of units of mutual fund that you have invested in is less. Let's take an example to understand this better. Let's assume you have invested in mutual fund A. You invest 1000 rupees monthly. Let's see how over a period of 6 months, your average purchase cost is less. Now in each month of your investment, the NAV would vary and according to the NAV, you would get units of mutual fund. Your investment amount divided by the NAV gives you the number of units you would get. Whenever the NAV is high, you get less number of units, and whenever the NAV is low, you get more number of units. So after 6 months, you have invested 6000 rupees. The average NAV, that is the summation of these 6 NAVs divided by 6, gives you the average NAV, and the summation of units gives you the total number of units you hold. But here, when you divide your total investment by the total number of units you have received, you get the average purchase cost, which here works out to be 43.64 rupees, which is less than the average NAV of 44. This is how the average purchase cost of the units of mutual fund that you have invested in is less. So this is how SIP helps us to get units of mutual fund at discount. It is almost impossible to time the market. So the next benefit that SIP gives you is automatic timing. You don't have to worry about how much to invest, when to invest. As through SIP, you are investing into the market regularly. The next benefit of SIP is it helps you achieve your financial goals comfortably, as you have been saving from a long time towards your bigger financial goals, be it your child's higher education, your retirement planning, etc. Let's quickly summarize the benefits of SIP. It instills a habit of regular saving. It reduces the overall risk of investment as you invest in the highs and the lows of the market. The average purchase cost of units of mutual fund is less. You are able to time the market automatically and you achieve your financial goals comfortably. Hope you know what are the benefits of SIP now. Thanks for watching the video. Watch the space for more such topics. Until then, happy investing.